Welcome to RFI's Banking Uncovered, the podcast going behind the industry PR, the media spin, the product awards, and the investor reports to look at what's really going on in the customer data, and to ask global thought leaders about their thoughts and views on the future of banking and payments.
Welcome to RFI's Banking Uncovered, where we go behind the industry reports, the media stories, and the PR spin to look at what's really going on in the customer data. I'm delighted to welcome Jane Prokop, Executive Vice President and Global Head of Small and Medium-Sized Enterprises at Mastercard. Jane is in charge of innovation, strategy, and product development across all SMEs, and most recently has just got back from a whirlwind global tour encompassing Australia, the Middle East, and Europe, which I'm looking forward to asking her about later. So, Jane, thank you very much for coming on Banking Uncovered, and welcome.
Thanks so much, Charles. It's a pleasure to be here.
Excellent. So let's get straight into it. In RFI's Global SME Dataset in 2024, we are seeing unprecedented movement in the SME banking and payment space. Like historically, 1 in 10 SMEs on average are looking to switch their main banking and payments provider in the next 12 months. In 2024, in the US, we have 1 in 5 looking to switch. In the UK, we have 1 in 4 looking to switch. In Hong Kong and Singapore, we have 1 in 3 looking to switch, 1 in 3 also looking to switch in Australia. Not only are they looking to switch, but the reasons behind that switching are dramatically altering as well. Normally, the key drivers behind switching are better pricing, better fees, better operational reasons. In 2024, across the board, it's a need for better digital banking. So, what do you think is driving that, and why is it that small business owners are so much more willing than consumers to embrace and try fintech? And sort of finally, how are therefore should financial institutions adapt their strategies to address this very very fast moving dynamic?
Yep, great question. I think the natural starting point here is to talk about how the needs of SMEs are really quite different from those of consumers. Often they get conflated. So people say, well, SMEs are just consumers in another guise, but that's really not true. I mean, SMEs need to handle a huge range of functions across their business: customer relationship management, marketing, inventory management, accounting, invoicing, payment collections, cash flow management, and the list goes on and on. So what's happened is that I think particularly with the pandemic driving many more businesses online, these needs have become much more acute. And even though the evolution and I would say proliferation of fintechs to provide services to SMEs began well before the pandemic really accelerated the move toward that, because many of these needs are not traditionally met by financial institutions. And so SMEs are now using digital services in their day-to-day operations. We see that generally our research shows 75% of them globally are using at least some digital services to meet some of those needs. And they really need, a more kind of seamless experience as well as a wider range of services. So they've been turning to fintechs for those services. So the fintech landscape, meanwhile, really over the past 10 years, there have been more and more fintechs stepping in to offer curated experiences for SMEs that address things like invoicing and cash flow management and inventory management, sales. Other needs that are coming up, e-commerce is really blossoming, and more SMEs are involved in e-commerce with online presences and sourcing and selling internationally. So these are all things that are really critical to SMEs businesses in order to make those resilient and grow those businesses. And the fintechs have been the first to step up with excellent user experience. So what we see is that roughly half of SMEs globally are turning more and more to non-traditional financial providers now. So they started with meeting some of these software and operational needs. And as their trust in the fintechs has grown, they have now started taking more financial products directly from fintechs. So that's a massive change in the ecosystem. And I think that the financial institutions are now seeing how that plays out. So you asked how could financial institutions better meet this trend. And what we see is that a lot of them are partnering with fintechs now to evolve their value propositions and to evolve their lending practices as well. So we see partnerships emerging between fintechs who are providing services. Sometimes they're creating joint platforms. So in the lending space, for example, fintechs are stepping in and working with financial institutions to automate the lending process and make use of alternative data and scoring. So this allows financial institutions to slowly evolve away from their traditional ways of evaluating small businesses for credit, which have generally focused on sort of manual review of financial statements and tax documents, and in-person meetings to verify people's identity. And they're able to do more and more of this online and use other forms of data to get a sense of the risk parameters of the business. So this enables them, by injecting sort of those practices into their lending, enables them to automate and have better performance of their portfolios, to apply risk-based pricing, and to make their customers a whole lot happier because they're able to actually accept applications from a wider range of customers and decision them much more quickly. From the other viewpoint, though, I would say that there are many advantages that financial institutions have, which are also very helpful in these partnerships because they're used to regulation, very stringent compliance. They're used to information security at a very high level, data privacy, making sure that use of data is completely consented by the applicant. And so it's really a great marriage between lending institutions, traditional financial institutions and fintechs in the lending space.
Yeah,
And
I mean,
what we see, one last note I would say is one of the biggest reason that our research unveiled in terms of SMEs' interest in changing providers is the ability to obtain credit from a provider.
Yeah, I have to say, as a somewhat dinosaur SME owner that set up a business 20 years ago, I am hugely jealous of anyone who's starting a business this day with the plethora of services and clever thinking that's gone into fintechs and apps and use cases and real-time cash flow information and no one ever sets up a business going fantastic and I can now finish on Friday night and spend the whole weekend reconciling my books. That's not a driver for anyone to set up a business. So just solving that is an amazing pain point. But you talk about what SMEs want, and we know from our own research that when you ask SMEs, what do you mean by better digital solutions? One of the, as well as real-time cash flow information and software integration, one of the biggest sort of pain points is the ability to make a payment to anyone from anywhere securely, and that's a very simple statement, but it has a huge number of challenges behind it. So obviously, on one level, it's a massive opportunity for an institution like Mastercard. So when you're thinking about that challenge, what are some of the things that you're thinking about how to approach it?
Yeah, I mean, there are a couple of things. One is that we really at Mastercard started some time ago thinking about what needs to be done beyond just the payment, making the payment happen. So of course, our core solutions like our cards of various types, digital payments, our cross-border solutions provide the actual network for the card payments to happen. But we've surrounded those with a suite of other services that help to make that experience more secure and more satisfying and meet more of the needs of the SMEs. So we have fantastic merchant offers programs, loyalty benefits that come with our cards, easy savings specials. These provide discounts on critical business services that SMEs need, both from global players and from local players in just about every market globally. We're also starting to pair expense management solutions in with the cards. We have a business controls engine within Mastercard that is offered out via API and can be integrated and used by the issuer to enable a small business owner to put controls on the way that their cards are used. So they can generate virtual cards out of their physical card, and they're able to generate those for specific purposes so that they can control the amount that gets spent for which purpose, by whom, at which merchant. And these are important things for them to be able to manage their cash flow better, right? And manage their spend better. We also have, speaking of safety, surrounding that, we have a lot of cyber solutions And those, as we know, we've seen, are very important to SMEs because almost half, about 43% of cyber attacks currently are perpetrated against small and medium businesses. And those are businesses which typically are less well prepared to meet those attacks because in many cases they outsource their IT services. So they don't really know the nuts and bolts of how their system is set up and what vulnerabilities it might have. So in addition to us providing fraud protection and all sorts of, encryption and tokenization on the card payments, we also have cybersecurity tools that we offer that are suitable for SMEs to use, which are fairly automated and allow them to secure their own digital presence. And we also offer a whole range of data and insights, which are offered out to our distribution partners for them to provide to their SMEs. And they enable the SMEs to, frankly, have a better understanding of how their business runs and what they can do to improve their business. So we have some very interesting solutions, I think, that make sense to highlight here. Open banking is a fairly recent player now in the financial ecosystem, and open banking, which provides service providers with a consented look at the banking transaction of an SME, enables lenders and other partners of SMEs to do a much better job using that permission data to understand, the financial position of the SME, what they may need, the risk associated with that, and then to provide those products to the SMEs. So it's an incredibly valuable tool that has a solution that's just come onto the market, and Mastercard has a division that handles open banking. Cross-border payments for SMEs are also a huge pain point, especially as SMEs are going global. And so typically what they see when they send a plain vanilla standard cross-border payment is it takes a lot of time. They have very little transparency over cost, and this is a major pain point because if they're sending money to let's say to a supplier overseas, and the supplier needs to receive a certain amount of money. If they send it through standard channels, they often don't know how much money is going to actually arrive at the other end because there are a lot of intermediaries in that chain. And our cross-border solutions for SMEs actually offer complete transparency, pretty much instant or certainly same-day actual settlement, and come at a very low cost. So these are some of the things that we can provide out through our distribution partners that help SMEs survive and thrive in this new digital age that we're in.
Yeah, you mentioned, I'll come back to open banking in a moment and everything to do with that. But you mentioned, security there, and security is obviously absolutely huge and a critical issue. And we know from our own data that yes, agreeing with you, most SMEs are very vulnerable to it. They don't think about it, and over 90% are very complacent about it and don't think about it till it's too late. The challenge with security is SMEs. As you say, they're making cross-border payments, they're growing quickly, they're going global instantly. It's all about speed of execution. So, speed is very, very important to them. But the second you start layering security on, the very friction you're trying to remove by providing speed and ease and convenience, you're then increasing because you're adding layers of security in order to protect the SME owner or the SME business. Particularly, I mean, not just domestically, but particularly, I can speak from personal experience. Once you start making cross-border payments, it can get quite tricky, and you really are opening yourself up to a world of sort of cybersecurity and fraud pain if you're not careful. So when you're working with your partners, how do you think about trying to get that balance right between enough security that you're protecting the SME, not so much layers of security that you're creating friction that they start to have a slow and painful and frustrating experience? How do you balance that?
Yeah, no, that's a great question. Our cyber solutions and our fraud protection solutions, first, if we talk about cybersecurity in general, we've invested more than $7 billion over the last 5 years in our cybersecurity capabilities. And we have helped launch more than 20 cybersecurity startups. And so, we have a variety of solutions that are working on our network behind the scenes invisibly every day and are stopping fraud. Our solution, which is AI powered, called Safety Net, we estimate has stopped over 20 billion in fraud over the past 12 months. So a lot of it is not even visible to the eye or noticeable in the transaction, because it's working behind the scenes, and it's actually curating and making sure that it catches fraudulent transactions before they're enabled to go through. So on the other hand, we have other solutions that can be applied and distributed to SMEs through our distribution partners. Those solutions are typically available through APIs to our partners. And so if I take an example, we've got a tool called My Cyber Risk, which is a prepackaged tool that does a 360-degree check of the SME's environment. Basically, the business owner doesn't need to know really anything about the way their online presence is configured. They can just say, here are my URLs that I have that are public facing. And this My Cyber Risk will go do a 360-degree evaluation and come back immediately and say, here are the vulnerabilities we found. And here are some things you can do to address those vulnerabilities right now. So that's, that idea of making it easy for the small business owner to use, and to then be able to pass on those results to someone who can, who's in charge of their network and can actually deal with those vulnerabilities is super important. You don't want to put too big a burden on the SME owner to figure out what's going on in the background.
Yeah, you mentioned AI there, and obviously, I mean, AI has been around for a while with ChatGPT and generative AI. It's obviously taken over in the last 12 months now. There's a lot of talk about generative AI, its impact on the customer experience, particularly at the front end. Arguably, as you say, it's going to have more impact at the back end with transaction monitoring, fraud prevention. As I said earlier, you've just got back from this whirlwind global tour. What are some of the most interesting and valuable use cases you've seen for Gen AI within the domestic and cross-border payment space?
Yes, I mean, I would cast the net a little bit broader than just to say in the payment space, because Gen AI, well, AI and Gen AI is a subset of AI. And actually, when I was in France, I gave a talk to clients about this, about these genres, different tools that are available. So we've been using AI for many years, and many institutions have been using AI for many years. And that starts with things like simple modeling. But I guess the hot topic typically now is Gen AI, and what are the uses of Gen AI? So what Gen AI does very well is it's able to analyze unstructured data, and analyze and process huge amounts of data to generate actionable insights and predictions that allow you to not only optimize payments, but allow you to understand the business better. So as I mentioned earlier, small business owners typically have very limited bandwidth. It's one or two owners who are wearing a lot of hats, trying to manage a lot of functions. And things that normally would take, they'd have to go hire some kind of analyst, have them gather a bunch of data and try to crunch it and analyze it. They can now do very, very quickly and easily using Gen AI to go out and gather information and present it back to them. So leveraging data insights both externally and internally, meaning from public data external to the company and internally from their own data, which often is just as difficult to analyze. That's a huge step forward. It allows them, of course, to automation, to automate a lot of tasks. So if you think about administrative tasks that they do, data entry, reconciliation, reporting, much of that can be automated using Gen AI. They can use Gen AI to automate or to reduce, I would say, the manual inputs into things like customer service activities. So if they want to have 24/7 customer service, normally they'd have to go and hire people in shifts to cover the phones. Now they can have a Gen AI powered assistant that handles a lot of routine questions and then refers just the ones that are sort of out of the normal box or require escalation to a human person, so it can bring those costs down. And we recently did a survey asking SMEs here in the US and Canada about tasks that they really would like to reduce their time spent on. And they said, the top things that really rose to the top were a lot of financial functions, accounts payable, accounts receivable activities, which are extremely time consuming, budgeting, And then things like customer service, which I mentioned earlier. So that view, the SMEs understand that there's a lot of potential there, and they're very eager to get tools that can help them. So we've seen some very interesting things. I think the magic is when the internal and the external data can be brought together. So publicly available data about the environment and common practices and what other firms are doing, together with a company's own internal data. So as an example, one of our partners has introduced Gen AI into their software platform. They have a software platform that handles e-invoicing and customer relationship management and some other functions. And they've introduced Gen AI to allow the small business owner to make key decisions about their business. So an example of a question that they can ask is, hey, I haven't refreshed my pricing on, let's say they offer physical therapy sessions. I haven't refreshed my pricing for a couple of years. What should my pricing be? And they can ask that question of the assistant. The assistant can go out, gather information about what other firms in that geographic area are doing, what their pricing is, how comparable the services are, combine that with data from the internal system about the services that are being offered by that company that asked the question, and then come back and say, typically your closest competitors are offering these price ranges, which tend to be 10% higher than yours or 20% higher, and the small business owner can very quickly adjust and say, okay, I see that I'm leaving money on the table. I really need to be pricing at a more fair market price. And these things can have instant impact on small businesses who are often very have a tough time with cash flow.
Yeah, cash is king when you're running a small business. I just wanted to come back to open banking for a moment. Now, obviously, open banking was launched in various jurisdictions sort of between 2016, 2017, 2018. Great fanfare politically, especially from some of the governments. And with consumers, you could argue it hasn't really taken off in some areas. It's patchy, perhaps because it was dealing with nice to haves rather than must haves. With SMEs, there's obviously a lot of opportunities there, because things that are nice to have for consumers, and we often talk about this, are actually must have for SMEs. SMEs are so time strapped and so time poor, and are wearing so many different hats that anything that can help them is generally grabbed with thanks. And we know that the SMEs attitude both to open banking and to embedded finances has grown. Their levels of interest have moved from sort of 1 in 5 in 2022 to about sort of 1 in 3 moving to 1 in 2. However, with the good news, there's obviously that hesitation, and we saw this back in the day with contactless in 2007, 2008, with digital banking in 2012, 2013, with mobile wallets. You have that dichotomy where there is the appetite for the ease and the speed and the convenience and the benefits, but there is the barrier that the concerns around security bring. And I remember with contactless, doing focus groups and small business owners and consumers, worrying about does your private data sort of fly between the card and the terminal, and a cyber criminal can all sorts of bizarre things as they adjusted to what now is a ubiquitous and readily used by almost all consumers and SMEs globally. That's obviously dissipating with open banking and embedded finance. But as it does so, how do you think about addressing that balance, and what are some of the more exciting opportunities that you see in this space with embedded finance and open banking?
People naturally think about what could be the downside. Could my data go someplace? And prior to coming to Mastercard about 3 years ago, I ran a fintech lender. We used open banking tools heavily, and over the few years I was doing that, I found that at the beginning, small businesses, when you sent them a notice saying, in order to underwrite your loan application, we need you to consent to us using this third-party service to look at your most recent 6 months of banking transactions. And the first thought that would come into their head, and they would express this to us on the phone, they would say, what does this mean? You can control my bank account? Can you make transactions? And of course, the answer is no, it's not. It doesn't mean that. And it took a while to kind of get past that barrier, but by the time 3 years ago I came to Mastercard, it was fairly ubiquitous among certainly in the US. And I know that the pace of change has varied by country, right? Depending on what players are there and how much penetration they've gotten and how much government regulation there's been. But I think that what really happens is, as you mentioned, with contactless, when people start to see the benefits. So the first time a small business goes, they've been turned down for financing by their bank, and they go to a fintech and say, I really need a loan of like $20,000 to replace this critical piece of machinery. And the fintech says, give me your consent to get open banking data. And they see that they can basically get an instant approval and get funding within a day or two from that alternative source. That starts to make them realize, and then nothing bad happens, right? Nobody steals their banking credentials, nobody's logging in an unauthorized way. Those proof points are extremely powerful. And I think we've really passed that barrier in the US within the past few years with SMEs for sure. So, the open banking data is used for a variety of things that impact lending, but one of them is KYB. It really helps to verify that the person who's applying for the loan, if you see them as an authorized user or person controlling the bank account, that's another data point that goes toward, understanding the beneficial ownership of the business. And it also provides a lot of data points that are not related to their financials or tax payments, but indicate, their cash flow and their, the degree of risk that's involved with financing them. So open banking is incredibly useful for credit decisioning and for opening that up to a much wider range of participants. On embedded finance, I think, it's all about, we're very excited at Mastercard about embedded finance, and embedded finance is incredibly applicable to SMEs because by and large, as I mentioned earlier, SMEs are looking for simplicity. So about 69% of SMEs that we surveyed said they want a one-stop shop kind of experience. They want to be able to go into one main platform and then access all of their tools, including payments and other things from that platform. So I think, it's all about going where the SMEs are doing their daily business. So if they have a vertical specific software, for example, that they're using, you really want to have the payment functionality baked into that software so that they don't have to exit that software and go into a separate system, whether it's a banking system or another system, to execute the payments they need to make. Because there are many benefits in addition to ease of use that go with putting them on the same platform. One of them is that the data come together on the back end so that the SME doesn't have to try to reconcile between two different systems about what was that payment for, which transaction is that linked to. They can all be linked in the same system. So we are very bullish about embedded finance, and we are acting, very very quickly to work with many partners to embed payments into their systems. So one example I can give, which I think is quite compelling, is working with consumer packaged goods companies. So what we've done there is we've started to create ecosystems where these CPG companies, manufacturers, are partner with card issuers and with acquirers who enable acceptance by merchants, and they digitize their distribution chain, because typically the distribution chain of a consumer packaged good company consists of medium and small sized businesses that are getting those products out, into the population, making them available at various points, retail points of sale. So what we can do when we create that sort of partnership between us, a CPG company, an issuer, and acquirer, is we can enable those small and medium-sized businesses to accept digital payments, often at a very low cost through, tapping on phone or some other method. And then those funds can be settled that they're receiving from their customers can get immediately settled onto a business card. And then that business card is used to order more inventory through the ordering platform of the CPG. So basically, we're embedding our payment methods into their ordering platforms. And this is incredibly beneficial for all the players involved. So if you look at the merchant, or the small business, they are creating a digital track record by digitizing those payments rather than, And it's astounding. Many of these payments today are still made in cash. So the way
Okay.
that CPG companies, I mean, it sounds surprising, but this is the case. CPG companies and their distributors are sending trucks out with inventory to retail points of sale. The owners of those retail businesses are paying in cash for delivery of, a packet or a pallet of goods. And that introduces all sorts of problems, including safety and security, when they're keeping
Yeah.
cash on premises, including the risk of basically having those rejected, because if the shipment arrives and they don't have enough cash on hand, guess what? Those goods aren't delivered. And so they have to wait for the next cycle. But it also does things like as I mentioned, it digitizes their track record. And as their payment record goes more and more onto digital forms, they create this track record that allows them to be financeable. So then lenders can come in and say, I'm willing to lend to you based on this track record. So it's incredibly powerful for them. For the providers, the consumer good company as well, it creates a lot of efficiencies in the way that they do business with that distribution chain. So we've seen that to be incredibly effective, and are looking to do that in many more industries.
Okay, you mentioned several times there, the differences with the US, and I want to come back to the US specifically in a second. But obviously, you've got a global role, working for a global organization in many different markets, and as you say, there are different jurisdictions, there are different attitudes in certain markets, there are different players, moving the market in new directions. So when you're looking at a global proposition, what are some of the regional differences you see in the attitudes to technology, the take-up of technology, and how do you deal with that? How do you create a unifying global proposition with so much local variation being required?
Yeah, you're right. There's a ton of global variation along many dimensions. So including the composition of the SME landscape, the degree of digitization and card penetration in those markets versus cash, many, many, many differences. We do see, though, that there are a set of global needs that are common across almost all markets. So access to capital is the biggest stumbling block. We know the World Bank estimates that almost $6 trillion is the gap annually between what SMEs ask for in financing and what they actually receive. So it's a pain point in every market across the globe. Help with and support with cash flow. So managing payments, forecasting, accounting, controlling their spend, controlling the spend of employees through business controls. This is a pain point that SMEs face in all markets as well. And they often have the additional complication that they're using personal payment solutions rather than business payment solutions. So they end up commingling personal payments and business payments. And so, getting that all straight is something that's a very high priority for many of them. And then third, I'd say, operating efficiency is a very high priority, a high need for them. Because operating efficiency makes them more financially robust, so that they don't need to go out and get external capital often, but when they do, they're able to get it because they're seen as low risk. So they need digital tools, they need integrated tools to help them build and grow the business. But so those are some of the highlights of the global needs that we see, and many of the products that we work on and that we partner and co-create with our distribution partners are aimed at those global needs. But we certainly see that there are a lot of different nuances. So if you think about, for example, Latin America, the degree to which populations in different markets of Latin America are banked varies quite a bit. And so even if you take the example of Chile. So in Chile, the population generally is banked. There's not an unbanked big portion of the population, but there's still more than a third of SMEs who don't have a business bank account. So they're using their personal solutions to try to deal with their business problems. In Mexico, you see cash is very, very dominant in the market. There's a desire for digital payment methods, and there are fintech players who are coming in and bringing innovations to market, but it takes time to change those dynamics. I would say if you look at Middle East and Africa, where I recently visited Dubai, our regional hub, one of the big pain points we see there is verifying documents for KYB. So there's largely a manual process still in place in many of the markets there for financial institutions to figure out their know your business processes. And it adds a lot of cost, and it adds a lot of time to the process of onboarding new SME clients. So I'd say in the EU, to give another example, we see a lot of family-run SMEs in the EU, the European Union, and they have a much harder time than other businesses in keeping up with digital tools and operating in the digital economy. So we see that fewer than 40% of them feel prepared to operate in the digital economy. And then in the US, we see that paying operating expenses is as costs go up for small and medium-sized businesses, is a very significant pain point. So that came out in a recent survey that we did, that came out as 62% said they were struggling with paying operating expenses day to day. So we see lots of variation, but what we try to do is it's a twofold approach. One is that we design global products that we can offer to our distribution partners that address the global challenges, the common challenges across these markets that I mentioned. The second is that we work with our regional and our market level teams to find local partners where there are nuances that need to be addressed. For example, in Latin America, most of the markets there have very specific, country-specific e-invoicing requirements that are put in place by the taxing authorities there. So those things need to be customized for every single market. And in many cases, what we'll work with the market level or the regional level teams within Mastercard to find those regional or local solutions that we need to plug in to our bundles of solutions and to those that we provide to our distribution partners in order to make them suitable for local conditions. So that's broadly speaking how we address that variation in the universe.
Yeah, it's interesting what you say about the Middle East. In one of the earlier episodes, we were talking to the founder of Zand, which is an online bank for small businesses in the Middle East, and the founder was saying the number one pain point was KYB and the challenges that creates for SME banking in the Middle East. I just want to talk quickly about personal use versus business use, because you just mentioned it there. Now we've talked about digital, about fraud, about cybersecurity, open banking, generative AI, embedded finance. If we just go right back to basics, back to the very sort of basic payment using a card, we know from RFI's data that most SME owners prefer, if possible, to use a business card versus a personal card. And across most countries, about 25% are using a business card, and about 50% would like to use a business card, but for whatever reason don't. They're still using a personal card for their business expenses. So if we sort of go back to the basics and lose the glamour and the excitement of all these technologies, how do you as an organization get cards, business cards into the hands of those SME owners who are using personal cards and would much rather use a business card, because that is a problem that is across every market?
Yeah. Great question. And it's something we think about a lot and work on a lot. So when we speak to SME owners and survey them, we find that the couple of concerns that rise to the top and that prevent them from using business payment products are the belief that these products have higher fees, that they're more expensive than personal products, and that they're difficult to get. They're not readily accessible. So it's a very cumbersome process to obtain, a business card, for example. And so, there are a couple things we do. We work with our partners on the first point, which is fees. So high cost of acceptance sometimes becomes an issue, right? Because we provide our services through acquirers who go out and work with the merchants to put in the solutions that allow them to accept cards, and the ultimate cost that is borne by the small business accepting the card is often seen as too high. So we've worked with many players on something called what we call SME in a box solution. So that's where the player offers both the acceptance infrastructure for the business for them to accept payments, and a business card that allows them to then spend the funds that are brought in that way. So I think I mentioned this with regard to CPGs, but we see in many markets, Latin America and Europe probably lead the pack in this, is that fintechs are increasingly going in and saying, you know, we want to digitize small businesses and even micro businesses who have never been part of the digital economy. So what we do is we'll offer both acceptance of payments from consumers to the business, and we'll also offer a card to the business. And the two are linked together in such a way that if the small business accepts the payments, and then those payments are settled immediately onto the card, and that's also a serious benefit. The money from the sales go directly onto the card in a matter of minutes in many cases. So they're immediately available for them to spend. The provider can say, if you spend, you know, at least a minimum of X from the card on actual point of sale spend, rather than going out and just taking the money out of an ATM, then we can reduce the cost of acceptance. And in some cases, they can bring that cost of acceptance to zero. So what that means is, you know, and they're providing a very low cost, like a phone and phone-enabled acceptance, or a very low cost device. So the cost of acceptance goes way down. The willingness of the business to then accept payments digitally goes way up. And then they're able to, like I said, get access to those funds very quickly and make payments immediately. So we've seen this be tremendously effective with numerous players in Latin America. We've seen it be very effective in Europe as well. So we have a large partner in Europe that's across 24 markets that has made this sort of a hallmark of their business model. And what they do is, you know, they go and they say, you can have zero cost of acceptance if you get this bundled offering. And I've seen myself in my travels in Europe, every time I meet an SME owner, of course, I talk to them and I ask them all sorts of questions. And in many of these cases, I've seen that they're actually using this solution from this particular partner, and are very wedded to it, you know, because it matters a lot to them to save, you know, 1% on their acceptance fees,
Yeah.
for example. It makes a big difference to them, and it's very noticeable. So it's very sticky, and they really appreciate it.
Okay, we've only got a couple of minutes left. I said I wanted to come back to the US earlier. Obviously, the US, it's you know, it's one of the biggest markets in the world. There are some unique differences between the US and other markets. So when you're looking at the US, what are some of the unique differences that you see, and more importantly, what are some of the big near-term opportunities that you see in the US market in the SME banking and payment space?
I think that, you know, in the US, we see, generally speaking, very high penetration of cards. So very high penetration of consumer cards and relatively high penetration of SME cards. I mean, it's still, we still have plenty of white space there. So we think we can dramatically increase use of cards as well in the US. But, you know, the US is a relatively evolved market, but there are still many B2B payments that are not digitized. You know, they're going through cash or check. And so one of the big opportunities that we're now embracing and zeroing in on in the US and other developed economies is to identify the specific business flows that are not yet digitized, understand why they're not, and then be able to go in and craft a value proposition that makes it very beneficial for the players in those B2B ecosystems to begin to use digital payment methods, cards, or, you know, cross-border transfers that are offered by Mastercard and our partners. So there's still an enormous runway on the business-to-business payment side that has just barely been tapped to date.
Okay, fantastic. Thank you very much for your time. We're out of time, unfortunately. I could keep on asking you questions about the untapped opportunity in the US, but we're out of time. Thank you very much. It's been fascinating hearing your insights and your views from your global position and from your travels and everything that you're looking to do in this space. And we look forward to talking to you again soon. Thank you very much.
Thanks so much, Charles. It's been a real pleasure today.